Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about Scale 1 to 2 Memory Based Recalled Questions 26/12/2021 exam dated. This is Bank of Baroda. I am also conducting Bank of Baroda Scale 4 to 5 and 5 to 6 descriptive based special training for Bank of Baroda forthcoming examinations of Scale 4 to 5 and 5 to 6. Please share among your friends. This is PAN number, income tax number is mandatory for all LRS liberalized remittance transactions. So without PAN number, income tax number, it is not going to be allowed. Under LRS, individuals and proprietor can remit up to $250,000 per year for financial year. But income tax number, PAN number is mandatory at the time of remittance. With respect of the amount of remittance, PAN number is mandatory. Atal Pension Yojana eligibility criteria APY Atal Pension Yojana age 18 to 40, joining age 18 up to 40 years. It is for unorganized sector. Minimum contribution period is 20 years. Eligible to receive the pension from APY after becoming 60 years. So these are the conditions. Joining age 18 to 40 for unorganized sector. Minimum contribution period is 20 years. Eligible to receive the pension from this is ENWR. Electronic negotiable warehouse. Electronic negotiable warehouse. Abbreviation they are asking. Electronic negotiable warehouse receipt. Under this, banks can sanction loan up to 75 lakhs under priority sector and up to 12 months under the loan up to 75 lakhs and up to normal warehouse receipt 50 lakhs to 12 months. So under electronic negotiable warehouse, negotiable 75 lakhs. YTM abbreviation yield to maturity. The relationship between yield of the bond and its maturity period. NFRA abbreviation National Financial Reporting Authority. NFRA National Financial Reporting Authority. It is regulatory oversee the quality of service of the audit professions. This is going to oversee the audit professions, reporting and quality of service extension, etc. That is called Net Financial Reporting Authority. NPCA full form National Payment Corporation of India. This is established by RBI for payments and settlement system. SAL specific approval list. SAL regarding export credit. This is issued by RBI. ECGC Export Credit Guarantee Corporation shall issue this specific approval list. When any exporter overdues are there, long overdues are there, at that time ECGC will put a report against the exporter. That is called specific approval list. Whenever a bank want to finance the exporter whose name is appearing in specific approval list, they have to take prior permission from Export Credit Guarantee Corporation. Question number 8. FATCA. FATCA means Foreign Account Tax Compliance Act. Foreign Account Tax Compliance Act. It belongs to USA. Whenever you are opening any NRI accounts of the USA citizens, you have to take this form agreement. This form is not applicable for minors. Belongs to USA minors. This is not applicable. But whenever you are opening accounts to US citizens, this form is you have to take. Sovereign gold bond redemption. Normally after 8 years, it is redemption period. But both interest and redemption process will be credited to the bank account furnished by the customer at the time of buying of the bond. At the time of investment, what is the account number given by the customer? That is going to be redemption proceeds after 8 years. Premature closure is also available after 5 years. But the same account number it is going to be created. HEF investment in sovereign gold bond. Sovereign gold bond HEF investment. Minimum 1 gram, maximum up to 4 kgs. Individuals also minimum 1, maximum 4. For trusts, universities, it will be up to 20 kgs investment per year. That is about this. RFA, red flagging of accounts. It is applicable 50 crores and above based on early warning signals. RBI had given suggested early warning signals in 2015 circular, RBI base circular. They had given this around 45 early warning signals. Based on early warning signals, banks has to report the account whether fraud is there or not. Under CRILIC platform, Central Repository Information of Large Credit Reporting Platform, banks have to report to RBI. What is the cutoff limit? 50 crores and above. This is red flagging of accounts. 12. NTP, normal transit period. In all foreign currency bills, which the bank is purchasing under export credit, post shipment export credit. What is the normal transit period? 25 days for all currencies. We have specified this FEDI, Foreign Exchange Dealers Association of India. The normal transit period for all foreign currency bills is 25 days, specified by FEDI, Foreign Exchange Dealers Association of India. What is meant by normal transit period? From the date of discount till the date of credit into our national account abroad. That period is called normal transit period. How much period they had given? 25 days. We had given FEDI. Not a material alteration. Not a material crossing of the general check to special crossing. That is not a material alteration. Crossing of a general check to special crossing. That is not a material alteration. Question number 14. Time gap for RTGS. After remittance, how much time it will take to create into party's account? 15 minutes. That is the 15-minute time gap. All payment RTGS in NEFT transactions of 50 crores and above undertaken by entities other than individuals should include remitter and beneficiary legal entity identifier. Remitter and beneficiary legal entity identification information is must from 1st April 2021. Non-individuals, other than individuals. Legal entity identification number is a 20-digit number, unique number, worldwide same number for all. So whenever a remittance is 50 crores and above, either RTGS or NEFT, remitter, sender and beneficiary, they have to provide the legal entity identifier. It is issued by Legal Entity Identifier Corporation of India, CCL subsidiary. Validity is 1 year and every year they have to take the renewal of this number. This is about the LEI. Mobile money identifier, how many digits are there? 7 digits. Electronic banking, 7 digits. MMID. Padao Paradesh, interest subsidy. Interest payable by the students availing of the education loans of the IBA for the period of moratorium. So they will get interest subsidy during the moratorium. What is the moratorium period? Course period plus 1 year or course period plus 6 months after getting job, whichever is earlier. During this period, whatever the interest amount on the loan that is going to get, they will get the subsidy from central government. This is the interest subsidy. This is the minority communities. For higher studies abroad, this scheme is just a very good scheme. That entire subsidy they are getting. Entire period of the moratorium period on the entire loan, they are getting full subsidy. Export credit margin in Bank of Baroda, that is 10%. Other banks also, some banks 10, some banks 20. This is bank specific. In your bank, what is the export credit margin? Normally 10 or your bank specific, you have to see 30. Techno-economic viability study report, where it is required. Normally term loans, project loans, we are insisting in the techno-economic viability report. Most of the banks, and this is a bank specific question, normally and generally 25 crores or about 25 crores, banks are insisting the techno-economic viability study report from external empaneled agencies. Banks are insisting this. This is bank internal, normally 25 crores or about 25 crores any term. BR Act, Banking Regulation Act 19, Section 20, Subsection 1. Restriction on advances. Bank cannot finance against its own shares. Bank cannot finance against its own share. This is BR Act Section 20, Subsection 1. Value date for spot transaction. Transaction date plus 2 days. Spot transaction value date means date of credit into the funds into the account. T plus 2. Transaction date plus 2. That is there. Direct quote. In India, we are following direct quote. What is the example of direct quote? $1 is equal. Dollar is constant. Rupee 74.8 buying rate, 74.90 paisa selling rate. What is the thumb rule? Buy low. 70 in this transaction. Buy low at 74.80. Sell high 74.90. This quote we are following 1993 onwards. So dollar is constant. Rupee value is going to change. That is called direct quote formula. Parties involved in letter of credit transactions. Importer. Importer means bank customer. Importers bank means that is letter of credit issuing bank. Letter of credit issuing bank. Exporter beneficiary. Beneficiary exporter. Advising bank. Advising bank is the importers bank agent bank. Importers bank is appointing a advising bank in the exporter country to advise the letter of credit to the exporter. So that's why advising bank is the agent bank of importers bank. The relationship between importers bank and advising bank. Importers bank is agent principal and advising bank is agent. For advising the services, importer bank is paying some charges for the bank. That is confirming bank. Sometimes the exporter want confirmation to the letter of credit issued by the importer bank in the exporter's country. So a bank which is situated in exporter's country giving a confirmation for the letter of credit issued by the importer's bank, that is called confirmation bank. The responsibility of confirming bank is as good as issuing bank, importer's bank, issuing bank. Negotiating bank. In the letter of credit where the exporter will negotiate the documents, this is called negotiating bank. These are the general parties involved in letter of credit transaction. Very important for all scales. Liability was not crystallized on the balance sheet date. At the time of preparing the balance sheet, liability was not crystallized. That is contingent liability. The liability may or may not arise. That is called contingent liability. In the bank's balance sheet, contingent liability we are showing as footnote, schedule number 12. Schedule number 12. That is there. Loan against tax saving FDR, no loan. We cannot provide any loan. This is normally deposit period is 5 years. No loan against this. Relationship between the price of the bond, yield. Inverse relation. Price increases, yield decreases. Yield increases, price decreases. That is called inverse, opposite relation. One increases, another will decrease. Yield increases, price will decrease. This is called inverse relation. Very important question. STR, suspected transaction reporting to Financial Intelligence Unit India within 7 days of a transaction determined as suspect. After confirmation within 7 days with irrespective of value of the transactions. Cost of goods sold is 3 lakhs. Inventory 60,000. Sales 5 lakhs. Calculate inventory turnover ratio levels in days. Inventory holding levels in number of days. Okay. Now they had given cost of goods sold. That is the denominator. Inventory value of stock 60,000 by 3 lakhs into number of days in a year. 365 we can take or 360 on assumption basis. Nothing wrong. Now 60,000 inventory divided by cost of goods sold 3 lakhs into 365. The unit on an average inventory holding level is 73 days. So very important for working capital assessment. What is the level of inventory holding in there? So this is very important this question. Plant and machinery is 2 crores. Current assets are 1 crore. Current liabilities 20 lakhs. Current assets are 1 crore. Current liability are 20 lakhs. Term liabilities are 30 lakhs. 30 lakhs. What is the net worth? This is the question. So, plant and machinery 2 crores. Current assets 1 crore. So, total assets are 3 crores. Plant and machinery 2 plus current assets 1. Total assets are 3 crores. Total current liability 20. Term liability 30. So, 50 lakhs is the current liability and term liability. Remaining is 3 crores minus 50 lakhs. That is net worth of the company or unit is 2.5 crores. Net worth, once again I am repeating. Plant and machinery 2 crores. Current assets are 1 crore. Total assets are 3 crores. On balance sheet equation, total liabilities are also 3 crores. After total liability 3 crores, current liability 20 lakhs, term liability 30 lakhs. Total 20 plus 30, 50 lakhs. Total liabilities are 3 crores. 3 crores minus 50 lakhs. Net worth is 2.5 crore. DS, debt service coverage ratio, used for term loan and project appraisal. DSCR, debt service coverage ratio. This is used for term loan and project appraisal. What is the formula for debt service coverage ratio? Numerator, net profit after tax plus depreciation plus interest on term loan. That is the numerator part. Denominator, interest on term loan plus installment of term loan. Normally, and on an average, DSR ratio during the entire project is, for all banks generally 1.5:1. 1.5:1 means every 1 rupee repayment, the earnings must be equivalent to 1.5 rupees. That is called DSCR average. What is the relevance of fixed cost for break-even point? What is the relevance in the fixed cost? Fixed cost means which is constant over a period of time. That is called. What are the examples? Depreciation is a fixed cost. Interest is a fixed cost. Rent is a fixed cost. Salaries are fixed cost. So over a period of time, these are constant, same. What is the formula for break-even point? Fixed cost, which is constant for a period of, divided by contribution per unit. So you will get BEP units in units, BEP, fixed cost by contribution per unit. So contribution is equal, what is the formula? Selling price per unit less variable cost per unit. Selling price per unit less variable cost per unit. This is the entire discussed. Margin of safety is equal break-even actual sales minus break-even sales. Margin of safety sales is equal total sales minus break. Current assets are likely to convert into cash within one operating cycle or 12 months from the date of the balance sheet, whichever is earlier. Normally, one operating cycle. One operating cycle means conversion of cash into raw material into finished goods into credit sales to cash sales. This is working capital cycle. One operating cycle or 12 months from the date of whichever is earlier. That is the current assets. This is about Securitization Act. Objection represented by borrower in SARFAESI action 13(2) notice. Party can raise objection against 13(2) notice. The borrower makes a representation raised by objection to the 13(2) notice issued by bank. For that 13(2)(a) objection notice, under section 13(3)(a), bank must give reply within 15 days from the date of that objection. Bank must give reply within 15 days of such receipt or representation. That is under section 13(3)(a), objection represented by borrower. Authorized officer under SARFAESI Act, scale 4 and above, that is normal question. Eligible assets under SARFAESI Act, very important question. Now we know only mobile, no. Mobile assets, immobile assets, even intangible assets. This question they are asked regarding intangible assets. August 2021, IIBF 4 to 5 also this question was asked. Intangible assets are eligible for under SARFAESI? Yes. That is the answer. So, mobile, immobile, intangible assets. Sale confirmation and SARFAESI Act. After payment of entire dues as per auction, bank can give sale confirmation. That is this is. Court fee for Lok Adalat. No court fee, nothing, because it is under Legal Service Authority Act. They are conducting just like a compromise. Only doubtful and loss accounts we are filing. Loan up to 20 lakhs. Doubtful and loss accounts only. No court fee, no appeal under local. Up to 20 lakhs, only doubtful and loss accounts we are filing under this. What is the procedure to be followed by banks while opening account to foreign students? Yes, this is important. All banks they are asking that a declaration about the local address shall be obtained from a foreign student, and we can open address without local address. The foreign student NRO account. After opening within 30 days, the NRO student has to give a local address. They have to give within 30 days. Meanwhile, bank is allowed to allow the transaction equivalent to 1 lakh, $1,000, US dollar 1,000 or 50,000 rupees on aggregate. During the 30 days, we can allow the transaction. This is the part of KYC circular. Invest in plant and machinery 8 crores. Turnover is 40 crores. Investment, normally where it will come? Micro 1 crore and 5 crores. Small enterprises 10 crores investment up to 10 crores, turnover up to 50 crores. This is will come under small enterprises definition. Small enterprises definition. Calculation of investment in plant and machinery or equipment on what basis? Very important question for all scales. Will be linked to income tax return of the previous year. So how we can, what value we can take the plant and machinery or equipment as for ITR return of the previous year on 31st March, or no prior ITR is available. Investment based on self-declaration for first year. When no ITR is available of the MSME customer, we can take based on self-declaration for the first year. That is the third one is purchase invoice value of plant and machinery equivalent. Whether purchase it first hand or second hand, as for invoice value we can take. This is very useful and knowledge based question. Transfer to appropriation from reserve funds, BR Act section 1949, section 17, subsection 1. This is the latest amendment, latest change. In order to supplement capital, increase the capital of the commercial banks, excluding local area banks and regional bank, shall transfer not less than 25%. Not from the yearly profit, not less than 25% of the profit they have to transfer to statutory reserve. Previously, prior to that 20%, now they had increased it to 25%. What is the objective? To supplement, to increase, to enhance the capital of the banks. This is before appropriation, anything, they have to transfer statutory reserve 25%. Latest amendment. Thank you very much for all for watching, and please share our group details among your friends. Thank you very much for all.